All right, guys, welcome back to another Bitcoin update. Now, obviously, I'm not at the office. You can see I'm somewhere completely different. I'm actually in Bondi, Australia now, and I'm doxing my location because I don't really care because I won't be here by the time I upload the video anyway. But I will be back in the office around 48 hours from the time this video is uploaded with a fresh video with the actual computer. Unfortunately, I'm on my phone today. But that doesn't stop us from giving you some good charts, right? Now, I'm going to be completely honest. I haven't done massive amounts of short-term analysis over the last 48 hours. I've been away, but I have done a decent amount. I have identified what's happening in the short term. And obviously, there's been some big moves up and down. And so we can identify what these structures are. Is it an ascending triangle? Is it an ascending wedge or channel? And that's what we're going to be looking at in a second. We're also going to be looking at a concerning chart on the macro scale, an ascending wedge formation forming back from July 2022, which could actually be quite bad for Bitcoin. Again, we're going to look at all of this in a second. And, without further ado, I think we'll just jump straight into it. Just know, guys, this is a freestyle video. I didn't script anything. I made it in, a bit of a rush. So you might have to deal with a bit of bad articulation, but overall, all the information is presented to a decent extent. So thank you guys for watching. See you guys in 48 hours. Cheers. All right, guys, welcome back to another video. I'll show you the view here, just in Sydney, Australia, currently at Bondi. So nice view there. I'll dox myself because I'll be out of this location by the time I post the video, so it's not really going to matter too much to me. But we'll get into the charts in a second here. I'll shut the door. I just want to give you a short-term update on Bitcoin and also look into some of the most important charts, including things like the DXY and things like Bitcoin dominance, which have actually made some progressions over the time I haven't posted a video, which is about 48 hours. So we'll look into that stuff in a second. Obviously, I'm not going to be able to give you the most in-depth analysis, and that's because I'm simply not on my desk, not on my office, my computer. But I will be able to give you just a brief outline of the information and really what needs to be said. So let's get into it without further ado here. I'll flip over to the Bitcoin charts and show you a few things. So what has happened on Bitcoin? All right, let's go into the short-term charts and see. Well, we're on the daily chart here, and what we can see, all right, is an ascending channel formation. Now, look, it's debated as to whether this actually is an ascending channel formation or whether it is still an ascending triangle formation. If we go ahead and delete this line here, the top line of the channel, you can actually see it still makes that ascending triangle that we're looking at. And by the ascending triangle, I mean, this horizontal line, we formed a candle close resistance there, which kind of validates the horizontal line to a certain extent, and then also a diagonal uptrending line forming an ascending triangle at resistance. We know where we are on Bitcoin from a longer term perspective. Okay, if we if we zoom back and we go to something like the weekly chart, actually, in fact, I'll bring over a different chart here and show you just, really giving you a good outline of where we actually are here on Bitcoin. If we go to the weekly chart, or go even to the 2-week chart so it fits on my phone a little bit better, we can see that essentially we're kind of in between two kind of important zones here. All right, we're in between, as you can see, 31.6K and 25.1K. Now, that's what I've drawn on my chart. Realistically, it's something like 24.5K and 32K, but these are the numbers I have in my chart here. So 24.5K and 32K, the green line and the red line, those are the two important zones in where we're looking at right now. The reason these zones are important is if we go ahead and we draw lines here, we can see this is a range in itself below 24.5K. We tested the top of the range on multiple occasions, rejected it from multiple occasions, and this is the bottom of the range for the entire bull market at 32K. We bounced from it on multiple occasions for support, and right now we're testing for resistance on a few occasions here. So as I said, we're in between 24.5K and 32K roughly, and that's kind of what we're looking at on Bitcoin. And right now, of course, we're testing the red zone. We're testing and trying to break into the upper range over here, trying to break back into bull market territory, or where we saw the bull market in 2021. So it's quite an important region, and it's not surprising for that reason that we have seen such contention in the price action. It's not surprising at all. In fact, we've been ranging in this zone from, I believe, around the 22nd of June now. So, it's a long-term resistance zone, and we're testing it. And it's quite hard to say what the structure actually is. I would say it's either an ascending triangle or an ascending channel, but obviously that doesn't really help us because an ascending triangle is a very bullish structure and ascending channel is a very bearish structure. And technically speaking, from a charting perspective, both of which are perfectly valid. The ascending triangle, although we saw a fake out, has seen, I'll draw them out for you here. The ascending triangle, although we saw a fake out, has seen 1, 2, 3, 4 retests, and the ascending channel has only seen 2, but the ascending channel only has 2 retests, but it has no fake outs, right? So it's quite complicated to understand what exactly is happening here for Bitcoin short term. But what we can say, and I know it's frustrating, but what we can say is that We can wait for the breakout, okay? It's not hard to say that. We can wait for the breakout. If we break down below this yellow line, it's obviously going to be bearish. We're obviously going to go down and retest some of these lower price levels at like 28.6K or 27.2K, which is where major support is on the weekly chart. If we break to the upside, cool. Then we're back in bullish playground and we can start to look to some higher levels, such as the higher 30K region or the mid 30K region, 36, 37K. That's basically what it is. Unfortunately, you know, if I had my computer, if I was at the office, I could probably give you an actual analysis in the short term and show you actually what's more likely. I just simply haven't done an analysis. I haven't had a chance. I've been away. So it's unfortunate, but realistically, it shouldn't really affect your outcome anyway, because I believe in breakout trading. I don't believe in trading in between structures. So all it's going to help is with convenience and knowledge of what's going to happen in the future. But realistically, it shouldn't actually help with your profits, right? Knowing what's going to happen with your structure is not going to help with your profits. But you should wait for the breakout and then react. You shouldn't be reacting before the breakout unless you have really, really good intel, really, really good information, which we simply don't have at this point in time. I do want to also talk about the fact that we've seen quite a bearish kind of development that I've kind of identified this over the last day or so. Just while I've been on my phone, we potentially do have an ascending wedge forming here on the longer term charts. Now, it's not a specific chart, as you can see, but it's stemming all the way back from a retest in July 2022 with the bottom retest in January 2023. We could actually be seeing a descending wedge formation. Now, I'm not particularly worried about this. I've made it very clear in videos in the past, and you can go back and watch some of my videos, or I'll just tell you now, you can take my word for it. If we do drop down and correct on Bitcoin, I'm not actually too concerned because I do know that cyclically speaking, we've only seen this period of the market 2 times. Let's go to logarithmic chart and show you. So I know, for a fact, and everyone should know for a fact by this point in time, that Bitcoin acts very cyclically. This is a very terrible format here. I apologize for that, but Bitcoin acts cyclically. And so, given the fact we're in a 4-year cycle, we see bull markets every 4 years, bear markets every 4 years, and these in-between phases every 4 years. We've only seen 2 of these in-between phases, for lack of a better word. Now, in order to have a mathematical trend, you need to have at least 3 data points. So 2 data points isn't enough. So technically speaking, based on the 4-year cycle, which we're relying on, we don't really have any existing trends to rely on as to where Bitcoin's going to go in this next year or so, or less than a year until the halving. So realistically, Bitcoin can do whatever the hell it wants. As long as it doesn't go below 15K, it's fine. So I'm not worried about this ascending wedge formation. I think even if we break this ascending wedge formation to the downside, we won't be seeing sub 15K. And I actually doubt we'll be going below 24.5K. If we do go below something like 24.5K, which is this green line, right? Green line of the screen here. If we do go below that green line, we do enter the old range, the bear market range again, that's when I'll start to flip a little bit more bearish, but even then I won't be cyclically bearish. But I will be bearish on medium-term charts, for example, because re-entering a bearish range is not a good thing. And that's when you start, de-risking on Bitcoin positions. That's when you start taking short positions. And realistically, that's when you should be flipping more towards the bearish argument. At this point in time, while we're in between these 2 important ranges, there's really no case to be made that the bearish argument is particularly important. Now, I do want to discuss a couple more charts as well, to the best of my ability, one of which is going to be the DXY. Okay, the DXY, as you guys know, is a chart that kind of measures the strength of the US dollar in relation to Bitcoin. Sorry, the strength of the US dollar in relation to other currencies, not Bitcoin. There's the strength of the US dollar in general. And so when this thing goes down, okay, technically speaking, we see Bitcoin go upwards. And when this thing goes upwards, we see Bitcoin go downwards, generally speaking. And we can very easily identify that. What was this over here, this downward stroke in the DXY? That was the bull market for Bitcoin. This one over here, that was the bull market for Bitcoin as well, okay? This upward stroke here, that was the bear market for Bitcoin. That was the bear market for Bitcoin as well. Every single major macro move since around 2016 on the DXY has led to the opposite effect on Bitcoin. And the DXY doesn't look particularly good right now, guys. I don't know if you know, we've seen the dollar weakening dramatically ever since, October 2022. And we're finally getting to the point where we could be breaking down from this ascending channel formation that's been forming since around, all the way back in 2007, 2006. So if we do break this down, where are we going to head to? Well, we have major support on the DXY down here in this green box, which is down here at around 88 to 92, something like that, 88 to 91. And obviously, on that way downwards, on that move downwards, we would see very, very bearish price action for DXY, obviously, because we'd have to go downwards, and hence, we could possibly see some very good price action for Bitcoin. The dollar in itself, you guys might know this, is not in a good position regardless. We know that. We're seeing countries left, right, and center moving away from a dollar, going towards things like, the Chinese yuan and other currencies, but mostly Chinese yuan, and BRIC nations specifically, driving that. So it's not a surprise if DXY is going down. especially during quantitative tightening as well. And when has it been going down since? Well, that's a very important thing to ask. Well, it's been going down, guys, since around the start of Q4, the end of Q3. When did Bitcoin bottom out? Right? Bitcoin bottomed out in November, around the same period of time. So the DXY going down has, in a way, happened at the same time as Bitcoin going upwards from the bottom, which is, exactly what you expect when the correlation is tight. So this chart being bearish is actually very good for Bitcoin, even though it's bad for the dollar. Another thing I want to look into, and we'll discuss all of this stuff more, I promise, when we get back to the office. But another thing I want to look into is Bitcoin dominance. I'm not going to show you the chart because these charts are very hard to show on phones, but I will just show you a tweet from Benjamin Cohen to explain what's happening here. In January 2022, 1 Bitcoin equals 12 Ethereum. Okay, 1 Bitcoin equals 26,000 ADA, 1 Bitcoin equals 258 Solana, 1 Bitcoin equals 1,500 DOT. And now in July 2023, 1 Bitcoin equals more of all of those things. Okay, 1 Bitcoin equals, almost 33% more Ethereum, or 25%, 33% more Ethereum, 4 times the amount of ADA, right? We've got 5 or 6 times the amount of Sol, and, again, 3 or 4 times the amount of DOT. So Bitcoin, what does this mean? Well, the value of DOT, the value of ADA, the value of Sol hasn't changed, right? But the valuation in comparison to Bitcoin has changed. And this is because, guys, Bitcoin dominance has absolutely skyrocketed. Right, let me find the Bitcoin dominance chart here on my phone, and I'll show you what we're looking at here. And this happens every single bear market, right? Why does it go up? So what is the Bitcoin dominance chart first and foremost? The Bitcoin dominance chart is a chart that measures in percentage form the strength of Bitcoin in relation to the altcoins, okay, in the market. So if it's at 50%, which is at right now, it means that 50% of the money in cryptocurrency is in Bitcoin and the other 50% is in altcoins. So the fact that it's going upwards since the Bitcoin bottom means that since the Bitcoin bottom, people have lost faith in altcoins. They're looking for secure investments, and the secure investment in cryptocurrency, obviously the most secure investment, is of course altcoins. Bitcoin, sorry. So, of course this thing's going upwards. This is exactly what happened in the last bear market, okay? Bitcoin dominance rose in the last bear market, okay? It's rising now, right? People are seeking security. People have lost all their money on altcoins in the last year and a half. They don't want to invest in altcoins anymore. They're not trading altcoins. They're going straight into Bitcoin for absolute security, or the most security they can find in the cryptocurrency space. And during this period of time, right, Bitcoin, valuation in comparison to all altcoins, even Ethereum, has gone upwards massively. And so if you held 1 Bitcoin since January 2022, it would be worth a lot more of basically any altcoin than it was in January 2022. This because Bitcoin dominance rises. And Bitcoin dominance, guys, generally rises until a few months after the halving. So we can expect this trend to continue. So if you're holding altcoins right now and you're investing in altcoins, you're chucking all your money in altcoins, you're actually doing it at the wrong time, cyclically speaking. You can do it. You can find the exception, but cyclically speaking, you're doing it at the complete wrong time. So I've discussed this a lot. You can type up on my YouTube channel, Wolves of Crypto, Altcoins 2025, or something to the effect of that, and you'll find videos where I basically say, which is something that's objectively true, Bitcoin dominance goes up until after the halving, and hence you're better off, on a generalized scale, holding Bitcoin than you are altcoins until after the halving. And after the halving is, of course, when the bull market occurs, hype comes back into the market, people start to get more risky with their investments, people chuck money in altcoins again. So that's that. But again, you have to apologize for my poor pronunciation, my poor articulation of sentences here today. I'm extremely tired. I've been traveling for the past 48 hours here. Haven't had much of a break. Haven't really had much time to look at the charts. But I thought I'd just bump out as much knowledge as I can give you on my phone, just off the top of my head. Again, I don't have much time. I didn't plan this video. This is all freestyle. You can probably tell. But I will be back in the office in probably 48 to 60 hours. We'll have to wait and see. And when I am, I'll release a full video of the complete analysis of short term, all of the stuff I discussed today and more in depth. But I thought I'd just give you this. It's better than nothing. I hope you enjoyed it. Check out BitGet Exchange, referral link in the description below. Check out Crypto Academy if you want to learn how to trade. Check out the VIP group, guys, on Telegram. You want to trade altcoins with me in there. And all of that stuff is in the description below. Thank you guys for watching. Hope you enjoyed the video, and I'll catch you in the next one. Cheers.